In the intricate tapestry of economic policymaking, few decisions carry as much weight as those concerning a nation's monetary stance. At the heart of this discourse lies India, a nation whose economic trajectory has long captured the attention of global observers. As the Reserve Bank of India, RBI, navigates the delicate balance between inflation control and growth promotion, a compelling narrative unfolds, one that encapsulates the complexities and nuances inherent in shaping macroeconomic policies. At the center of this narrative stands Jayant Rama Verma, an academic whose 4-year tenure as an external member of the RBI's Monetary Policy Committee, MPC, is drawing to a close. Verma's departure, however, is punctuated by a resonant dissent, one that challenges the conventional wisdom underpinning the central bank's monetary tightening measures. In a poignant rebuke of the RBI's hawkish stance, Verma contends that there is a dearth of evidence linking the escalation of food prices to a broader inflationary contagion within the Indian economy. This assertion strikes at the core of Governor Shaktikanta Das's rationale for maintaining a restrictive monetary policy, a position that has kept the benchmark interest rate at a lofty 6.5% for over 18 months. Verma's critique is rooted in a deep understanding of economic theory and empirical data. He posits that the recent spikes in food inflation have been transient in nature, failing to precipitate a spillover into the broader realm of core inflation, a measure that excludes the volatile food and fuel components. This observation challenges the RBI's long-standing trepidation that elevated food prices will inevitably permeate the entirety of the consumer price index. Delving deeper into the crux of his argument, Verma invokes the tenets of economic theory, asserting that under a credible inflation-targeting regime and a reasonably restrictive monetary policy, food price shocks should manifest merely as a shift in relative prices, rather than igniting a conflagration of generalized inflation. This contention strikes at the heart of the RBI's mandate to maintain price stability while nurturing economic growth. Verma's dissenting voice echoes a broader debate that has reverberated through the corridors of policymaking in India. A top government official has recently advocated for the RBI to adopt an inflation measure that excludes food prices, a proposal that will undoubtedly fuel further deliberation as the central bank's inflation targeting framework approaches its review in March 2026. Compounding this discourse is the government's initiative to revise the Consumer Price Index, a move that could potentially result in a substantial reduction in the weighting of food items, currently accounting for a staggering 46% of the index's composition. Verma's critique finds an unlikely ally in Ashima Goyal, another external MPC member who, alongside Verma, stands as one of the 2 policymakers on the 6-member panel to vote for rate cuts in August. The divergence of opinions within the MPC underscores the complexity of the issue at hand and the multifaceted considerations that must be weighed in forging a consensus. On the opposing side of the debate stands Shashanka Bide, the 3rd external MPC member, who has steadfastly voted to maintain the status quo. Bide contends that the recent moderation in inflation is a byproduct of the central bank's prudent policies and favorable base effects. He argues that a sustained period of moderate inflation is a prerequisite for achieving high, long-term economic growth, a perspective that resonates with the RBI's overarching mission. As India stands at this economic crossroads, the impending transition of external MPC members adds another layer of intrigue to the narrative. A government-appointed committee is actively engaged in the process of selecting new external members, a development that could potentially reshape the dynamics and perspectives within the policymaking echelon. In this unfolding saga, the fault lines between divergent economic philosophies become increasingly apparent. On one side lies the conviction that transient food price fluctuations should not dictate the course of monetary policy, lest the pursuit of price stability comes at an unjustifiable cost to economic growth. On the other, there is an unwavering commitment to the principle that sustained, moderate inflation is the bedrock upon which long-term prosperity is built. As the curtain falls on Verma's tenure, his parting words resonate like a clarion call, urging the MPC to embrace its dual mandate with renewed vigor. He contends that with inflation trending toward the 4% target, the time has come for the committee to prioritize growth considerations, lest the sacrifice exacted by prolonged monetary tightening proves excessive. In the annals of economic history, India's current predicament will undoubtedly be chronicled as a defining moment, a juncture where the delicate interplay between theory and pragmatism, between short-term exigencies and long-term objectives, was laid bare. As the nation charts its course, the echoes of this discourse will reverberate through the halls of policymaking, shaping the trajectory of an economy that holds the aspirations of over 1 billion souls. For the ordinary viewer, long concerned with financial fortunes, and the professional analysts immersed in the intricacies of economic policy, this narrative serves as a poignant reminder of the profound impact that monetary decisions can wield. It is a saga that transcends mere numbers and statistics, delving into the very essence of how nations navigate the ever-shifting sands of economic reality. In the end, the resolution of India's monetary policy quandary will not be found in the rigid adherence to dogma, but rather in the judicious balancing of competing priorities, the synthesis of empirical evidence and theoretical constructs, and the unwavering commitment to safeguarding the prosperity and well-being of its people. It is a challenge that demands not only economic acumen but also a profound appreciation for the human consequences that underlie every policy decision. As the world watches with bated breath, India's journey through this economic crucible will undoubtedly yield lessons that resonate far beyond its borders, serving as a testament to the enduring pursuit of equilibrium in an ever-changing global landscape.